I think the thing about Australia is that we're in a slow growth path, but when you just look at the real growth numbers, it underestimates how slow the growth is. When you look at nominal growth, it's very, very weak now, and we've had a material income shock to the Australian economy. Unfortunately, it's kind of like a slow train crash in that every quarter the numbers get a little bit worse and a little bit worse and a little bit worse, and we're constantly waiting for them to get materially worse before we expect an RBA response. At some point, we believe the RBA has to respond to the slowing economy. The mining sector is much weaker than many commentators expected, and the non-mining sector is much weaker as well. Now, the Aussie dollar weakness we've seen will have some impact and will probably help on the employment side, because you're moving away from capital scarce industries to capital intensive industries like tourism and education. So it will help on the employment side, but will have no real impact on the GDP numbers. So we fully expect the RBA will need to cut rates further this cycle.
Okay, and are you talking a single, a couple, or TBC?
I think we'll see at least two, and we could potentially see a lot more.
Mm-hmm.
We've been negative on the currency for a while. We believed the devaluation was coming. It actually came sooner than we thought, but we were definitely expecting it, and that just signals to us that the economic growth is a lot worse than we'd originally anticipated in China. They've moved a little bit now, 3 to 5%, but we believe there's another, in my team we believe there's another 15 to 20% coming, and that will have ramifications for the rest of Asia, which also will have to devalue their currencies as well.
And over what sort of time period do you see this movement taking place?
Oh, over the next couple of years. I think it could happen quite rapidly.
And what are the implications of that move? For China, are they going to see a flight of capital from the country? Is that what you're expecting?
I think we're seeing that already. And by moving by small increments just encourages more capital to flee. I think the biggest impacts are though on the developed world, like the US and Europe, where they see marked falls in their import prices, and therefore again it puts pressure on the central banks or the governments to have to respond to slowing inflation rates or actually deflation rates.